Have you ever wondered what, literally holds a country's growth story together? Today, we're diving into APL Apollo Tubes. This is a company that's not just part of India's massive infrastructure boom, they are quite literally the steel framework that's shaping it. So, let's break it all down.
You see it everywhere, right? Gleaming new airports, massive metro lines crisscrossing cities. India is right in the middle of a huge, once-in-a-generation transformation. But you gotta ask yourself, what are the basic building blocks making all of this happen? Well, the answer might be a lot simpler and way more important than you think.
Okay, so let's get into the first big piece of this puzzle. To really understand a company like APL Apollo, you first have to get your head around the sheer scale of the opportunity in front of them. And we're not just talking about a little bit of growth, we're talking about a full-blown infrastructure gold rush. Just look at this number, 111 lakh crore rupees. That's over 1.3 trillion US dollars. It's a mind-boggling figure, and that's the Indian government's official commitment to its national infrastructure pipeline. Now, this isn't just some line item in a budget. It's a tidal wave of demand for construction materials, and structural steel tubes are right there at the center of it all. Now, here's where the market itself gets really interesting. A huge 60% of it is still run by smaller, local players, the unorganized sector. But as new regulations come in, demanding higher quality and better safety standards, there's this massive, built-in opportunity for a trusted, organized leader like APL Apollo to just come in and scoop up all that market share. And, well, that brings us right to the market leader. In this consolidating industry, one name really does stand head and shoulders above everyone else: APL Apollo. Let's take a look at how they've managed to build such a commanding position. Okay, so get this. In the organized market, APL Apollo controls over 55% of it. I mean, think about that. This isn't just leadership, it's straight-up dominance. When people in India think of structural steel tubes, they're thinking of APL Apollo. So how they do it? Well, it really comes down to four powerful pillars. First up, their massive scale. It just gives them a huge cost advantage. Second, their distribution network. With over 750 partners, their products are simply everywhere. Third, they've got over 1,000 different products, basically anything you could possibly need. And finally, and this one's a biggie, that Apollo brand name has become a seal of quality that the smaller guys just can't compete with. All right, so a great story is one thing, but do the numbers actually back it up? Let's switch gears and look at the financial performance to see what the engine behind all this growth really looks like. And oh boy, do they ever. I mean, just look at this chart. The explosive growth in their earnings, or EBITDA. It's incredible. Going from about 1,400 million rupees to nearly 4,500 million in just a year, this is the perfect visual of a company just firing on all cylinders.
And what's driving all that profit? Well, it's steady, reliable growth in the actual amount of stuff they're selling. Quarter after quarter, the trend is crystal clear. They are just consistently selling more and more tubes. This isn't some one-off fluke. This is the foundation of their success.
Now this, right here, is what separates the good companies from the great ones. While they've been expanding like crazy, APL Apollo has actually been making its finances healthier. They've significantly cut their debt. Think about that. They are growing and becoming less risky at the exact same time. That's really hard to do. This stat just says it all about the quality of this business. A return on capital employed of over 24% is fantastic. In simple terms, it means for every dollar they reinvest back into the company, they're generating a huge profit. It's the hallmark of a world-class, super efficient operation. So they've pretty much got the present locked down. But what about the future? Let's dig into their strategy for keeping this incredible run going. Okay, this image right here, this is the key to their whole future strategy. APL Apollo is moving way beyond just selling simple pipes. They're innovating with these higher-margin, value-added products. I mean, look at this house. It's not just some pipes hidden in the walls. We're talking about the structural columns, the fences, the handrails. They're weaving their products into the very fabric of modern construction. And they're putting their money where their mouth is. They have a really ambitious plan to back all this innovation up. They're investing 15 billion rupees to ramp up their capacity from 4.5 million tons all the way to nearly 7 million tons. They are literally building for the future demand they know is coming. So this brings us to the final, and let's be honest, the most important question for anyone watching this. What is all this quality and promise actually worth? It's time to weigh the price you pay against the promise you get. So, let's recap. The story is incredibly strong. You've got a dominant market leader, a booming sector, fantastic financials, and a clear path for more growth. It seems like an obvious buy, right? Well, it's not quite that simple.
And here it is. This is the core dilemma. On one side, you have an undeniably fantastic, high-quality business. No one's arguing that. But on the other side, the market knows this, and it has put a very, very premium price tag on it. You have to pay up for this kind of quality. And the numbers make this crystal clear. Just look at any of these key valuation metrics, whether it's PE ratio, PB, you name it. APL Apollo is trading at a much higher price than its competitors. For example, you're paying 35 times its yearly earnings, while the average for similar companies is only around 22. That tells you just how much future success is already baked into the stock price today.
So, to kind of put a bow on it, our overall score gives the company a very strong 8.3 out of 10. This rating, which looks at everything, confirms what we've been saying. Fundamentally, this is an excellent company.
But this breakdown right here, it reveals the catch perfectly. Just look at the amazing scores for its competitive position and its growth prospects. We're talking nearly a 9 out of 10. But then, bam, you get to valuation and the score drops to a 6.5. This single chart tells the whole story. A world-class company, but with a very expensive price tag.
Which brings us to the final verdict, a hold. APL Apollo is an exceptional business, no doubt about it, with a fantastic future. But at its current share price, there's just very little room for error. The quality is there, but the price demands perfection, and that leaves a pretty slim margin of safety for anyone getting in right now.
Look, there is absolutely no doubt that APL Apollo is a foundational piece of India's future. So the ultimate question this leaves us with isn't about the quality of the company, it's about the price. What's the right price to own a piece of that future?